Jim Cohan, the 10-year Treasury note is stubbornly below 3%. It's hanging around 2.7%. Doesn't seem like it's going to get any help with today's flat GDP number for the first quarter. So are rates going to rise or what?
We don't think they're going to start rising anytime soon. Like you just said, we had a very weak first quarter GDP. It looks as if GDP growth for the entire year, as we try to stretch it forward, is not going to be substantially above 2%. That is not the kind of environment in which interest rates start to go up. The unemployment rate is still too high, according to the FOMC today. They're in no hurry to raise interest rates. So we may not see interest rates rising the rest of this year.
So do you stick with bonds or do you raise cash? You go into stocks? What do you do in this environment?
Well, in my view, since I'm a bond guy, I'll talk about bonds. I think you invest for income. You continue to invest for income. That is, you don't stay in cash. You don't go into cash. But look for those segments of the fixed income markets that are producing better coupon income. Basically, corporates, even high yield, even though the yields aren't very high, they're still better than zero. And municipals, some areas of the muni market.
It seems like the spreads on high yield are really, really tight. I mean, tight to the verge of you can get that rubber band snapping. You getting a lot of issuance? I mean, what's going to take high yield any further?
I think the spreads are relatively narrow. There's no question about that. They're the narrowest for the weakest credits, like the triple Cs. But if you look back to 2005, 2006, 2007, they stayed in a relatively narrow band for a long time until the middle of 2007, when things really began to fall apart. I guess the answer is that we look at the credit fundamentals, not rising interest rates, not Fed policy, credit fundamentals, and those still look positive for high yield.
And I'll assume you're looking at credit fundamentals when it comes to munis as well, because you got to be careful. You got to avoid the Detroits and the Stocktons and the Puerto Ricos of this world.
I think on the muni side, again, good credit research is extremely valuable. You're right. You avoid the problem areas like the Detroits. But away from that, because those kinds of problems create opportunities. If you're supported with good credit research, you'll find bargains in the muni market. You'll find decent values.
But in general, do you like the GOs or the revenues? You like the states or the sewers?
No, I think I think again, you don't want to pick and choose. You want to look at individual credits. As a very general rule, we tend to focus on revenues these days, but still, occasionally, for example, in Illinois, when everybody was negative on Illinois, there were good values in GOs.
Interesting. Thanks a lot, Jim.
Thank you. Thanks for having me.
Thank you for watching The Street.